All right, guys, back to work. Back to work. Earnings are out, and man, the charts look beautiful tonight. There are 3 clues on the charts right in front of me right now that tell us everything we need to make money tomorrow. Where to get in, where to get out, where to sit on hands to avoid losses. By the time we're done this video tonight, you'll have an easy roadmap to make money on Thursday. Now, before we jump in and talk my favorite trades for trading the reaction to these big NVIDIA earnings, before we jump in, though, make sure you subscribe to our channel. Hopefully by now you know, right? You don't want to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. Enough of the intro, though. Let's make some money on Thursday. Reaction Thursday. Now we got the big NVIDIA earnings out of the way here this week. Charts are all ready to go here for tonight. NASDAQ and the triple Qs. I got the E-mini and the SPY in front of us. Boy, markets continue their bullish move, right? Bullish overall on the S&P, bullish overall on the NASDAQ. We got that reversal we talked about in last night's video. I'll tell you, the direction right now on the S&P and the NASDAQ, the SPY, the triple Qs is pretty easy. We know we're bullish. The hard part is timing the entries, right? The direction is pretty easy. And I'll tell you right now, that big move we just saw this afternoon, that reversal we saw this afternoon is a very important clue that will tell us how to time the perfect entry and the perfect exit for tomorrow. We'll talk about why I say that in a moment. We'll talk about entry timing here in a moment. But first, though, let's check our schedule for tomorrow because there's actually a couple big news events. There are 2 news events I'm watching for tomorrow. Both of them are right around that 10 o'clock top of the hour tomorrow morning. Got PMI composite flash, and we get the home sales number at 10 o'clock Eastern time. Now, these, of course, are nowhere near as big as the NVIDIA report we saw this afternoon. So we definitely know that'll be a big part, the reaction to that tomorrow. But definitely keep your eyes on that 9:45 PMI number and the home sales number at 10 o'clock Eastern time. I always pay attention whenever I have big news coming out at 10 o'clock Eastern time. So make sure you're paying attention at your desk tomorrow morning. Of course, we'll trade together tomorrow morning, 8 o'clock Eastern time in our trade room. So keep that on your radar. Don't worry about the jobless claims report at 8:30 Eastern time with the nat gas stuff, right? 9:45 and 10 o'clock Eastern time. Those are the big catalysts for tomorrow. Now back to our charts because as we know, right, it's good to know when the news is, but the money is always made on the charts. Let's now go my favorite trades here for tomorrow. We'll go the E-mini SPY first. We'll wrap things up tonight, the NASDAQ and the triple Qs. As I mentioned earlier on, direction's pretty easy right now. We know we're overall bullish. We got that reversal we talked about in last night's video, and really at this point now, big strong run up a few weeks ago, early February. We know the buyers right now have one thing on their mind. They want to finish off that move and punch their ticket back up around that 50-66 half level on the S&P and the SPY, and we'll cover the NASDAQ here in a moment. This big green candle, that big reversal coming off of that low is a huge clue. Let's now drill down to our tick charts. The entry timing is difficult on a 60-minute time frame. Tick charts are going to make everything easier for us. Let's now drill down to our tick charts here. This is a 7,000 tick chart you'll see linked up there in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, that moving average right there, 21 EMA if you're tuning in for the first time. There are 3 really simple clues we see on this chart right now that I think tell us pretty much everything we need to know to make money for tomorrow. First things first is a range breakout. We had a range down here. Anytime we see a range breakout, we look for a breakout pullback. It's a very consistent and very simple strategy. Anytime we see a range breakout going with the overall trend, the 60-minute time frame, we know a breakout pullback is likely where there'll be a lot of buyers for tomorrow. That's one big clue. The most important clue, I think, though, is that big move higher. Now, why is a big move higher so important? Well, first of all, nobody wants to buy high, right? We don't want to buy high. We want to buy low, right? Anytime I see a big move higher, I always expect a 2-legged pullback and a retest of that high. Write that down, kids. Write that down. Anytime you see a big move higher going in the direction of that 60-minute time frame, you want that 2-legged pullback and a retest of the high. We'll talk about how to time the perfect entry entry with the two-legged pullback. We'll unpack that more as we go deeper. And then one of the most important things, I'm always talking about this in our trade room. If you want to make more money, don't trade more often. Don't trade more frequently. Get better at holding on to your winners, right? Let your winners run. This next clue is really important, a news spike. Anytime I see a big, strong spike off a news event, that can be used as a measuring spike or a measured move. Let me teach in our free trading classes. If we do get a two-legged pullback here, we now know how large, right? We know how large that news spike is, and that creates a target for us. Maybe tomorrow, maybe on Friday, right? But we know, though, the size of that news spike can be used as a measuring spike. And once we get that two-legged pullback, and we know how deep the pullback is, then we can start to pin that measured move up, and that will tell us where to take our profit, give you a chance to be more patient and let those winners run for the rest of the week here. Now, these three clues, a range breakout, a big move higher, and a news spike, whenever I see this cocktail of clues, there are two types of strategies I'm going to look for tomorrow. I'm going to cover one of them right now on the S&P, and later on in the video, towards the end of the video tonight, I'll cover the second one, which I think is just as good and just as easy. We'll cover the second one later on the NASDAQ before we finish up video tonight, right? So I'll give you a reason to stick around all the way to the end. So now that you know the clues here, let's talk about timing the perfect entry. Let's talk about that two-legged pullback, right? Two-legged pullbacks, anytime I see a big move like this, I don't want to buy high. I want to buy low. And when I say two-legged pullback, and we talk a lot about this in the free video classes, I want to get under the moving average and look for a pullback that goes a little bit more than a measured move. Imagine now we get underneath the 21 EMA, under the 21 EMA, we pull back, it's two legs. Now again, I don't know how big the leg will be, but I do know though, I'm looking for roughly a measured move, right? Roughly a measured move. It'll just go a little bit more than that measured move. Two-legged pullback, underneath the moving average, a little bit more than a measured move. Now, I have no crystal ball, right? I don't know. Sometimes these will keep on going. So I'm not going to pick the bottom. I'm not going to blindly buy the bottom. What I'll do is, once I see that two-legged pullback into hopefully that breakout pullback zone, I'm going to use what we call a two-try failure. I'm not going to pick the bottom. I'm going to wait for the pullback to that 21 EMA. And once I see bears try once, and once they try twice, now I know they're stuck short in an overall bull market. We know the buyers want to go back and retest the high. Once those bears get stuck short, now we can buy right into those stops and rip this thing, right? Squeeze those stops and run back up to retest the high. Now pay attention. As the market goes higher, I don't want to buy high. I want to buy as low as I can because that's the way you make money. You buy low, and to do that, you do it with what's called a bear trap. Now, bear traps are very, very important. You learn, we teach this in our free video classes. It's a higher high in price and a move right below that little prior swing, right? So think about this once again. It's a big move up. It's a breakout pullback, right? It's a two-legged pullback, a bit more than a measured move. We don't pick the bottom down here. What do? We trap the bears in. We use their stops to fuel that move going higher. And as we're going higher, we grab those bear traps before the market retest the high, take half off at that retest of that high. And where's the other half of the target? Where's the final target? Where's the runner target? Remember, use the news spike, right? Use the news spike to tell you how far the rest of that move will go. That's a very, very easy way to make money after a big news event like this. Now, this is kind of the dream scenario for tomorrow. Let's talk a few variations because as you know, right, the markets don't always give us exactly what we want. For example, sometimes we get that two-legged pullback, but the two-legged pullback is really strong. And oftentimes what happens is that two-legged pullback, we'll get the entry, right? We'll get the 1, 2, we'll get that entry going higher, but sometimes what happens is because it's so strong going lower, it'll hold the underbelly of that move, of that leg going lower, and run back down to take out that low. Again, we will already have our first profit target, right? We'll already move our stop up to point of entry. That won't be the problem. The problem will be we're not going to make that run back up and retest the high. Pay attention. This is where a double bottom reversal. We talked about a double double bottom reversal repeatedly in last night's video. So this should be a refresher if you watched last night. When we retest the lows here, now what's happening? Think about this. Anyone who sold that pullback, they begin to take their profit at that low. So professionals are going to sell high and they're going to buy their way out at that low. Who comes back in now and sells short down here? Rookies, right? Who's selling short? Who is selling short on that retest? Rookie traders. These are not professional traders, right? Tight stops. What I'll do is trap those rookies in, use that failure pattern, and again, as it tries to rotate higher, grab that bear trap pattern on the way back up to where? Back up to retest that high, right? So again, if we do get that two-legged pullback, we'll probably get that bear trap, that two-try failure, squeeze those stops. But if they hold that prior swing low and they run that sucker back down again, this is not a reversal, all right? The game plan stays the same. Trap those bears in again. This one, guys, is usually even more lucrative because now everybody's a buyer, right? The bears who sold off the high there, they're a buyer. Everyone is buying off that because the bears are trapped short and we can squeeze those stops going higher, that two-try failure, and then grab that bear trap and again, retest of the high. That's the goal. Boy, I'm getting excited just talking this stuff through you guys here on this video. Now, let's slow down for a second because I know most of you guys watching right now, you've taken our free video classes, you've learned things like traps and failures, how to trade breakout pullbacks, okay. But if you're watching for the first time right now, this might be a brand new language for you. But don't you worry, I teach all these entry patterns. I have hundreds of examples of bear traps, bull traps, failure patterns, range breakouts, all included. I teach all of this inside our free trading classes. I'll put a link up top here for you, upper right-hand corner. Grab that link and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. On top of that, I'll teach you 4 of my favorite entry patterns to help kickstart you making money. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades, if you're taking too many losses, if you're struggling to qualify for a funded account right now at Apex or TopStep, hit that link up top there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. And also to keep in mind too, if you can't grab the link up top there, I'll put all the important links we talk about tonight in the description of the YouTube video. Put the free class links. We trade together every morning in our trade room. I'll put the trade room information in the description as well. And also, too, I'm on Twitter. I post a lot of updates on Twitter every day. If you're on Twitter, give me a follow. All the details in the description of the video. Now, I love the idea of getting that deep pullback, trapping those bears in and squeezing those stops. But you know what? Sometimes we don't get that. Sometimes we don't get a chance to squeeze those stops like this. Sometimes what happens is there are so many buyers down here, it just boing, runs right back up again. These can be frustrating because we don't get a good entry signal on that V bottom. Usually when V bottoms happen, it'll pop up and begin to grind and grind and grind. Now pay attention. These can be very easy to lose money with because if you're anything like me, once it starts grinding up, that voice in my head says, come on, dummy, get in. You're going to miss this. Whatever you do, do not chase after this. Do this instead. Mark off a trend line off the high, bring it down off that low, create a channel. We talk about channels in our free video classes, right? Find that channel and then look left and find a prior swing, right? Look at those prior swings right there. What you want is you want to get an area where you're around a prior swing and you want to grab that first test, right? That first test off the low of that channel. Now, I can't teach all the entry patterns in this video tonight. We'll be here way too long, right? But this could be any of the entry patterns we talk about in our free trading class. It could be a trap pattern like this. It could be a failure pattern as we get underneath the moving average. Bears come in, get short off of 21 EMA. We squeeze their stops for a failure into pullback combination, right? So the bottom line is, right, if we make our run lower, if we get that two-legged pullback, right, or one-legged pullback for that matter, if we get that sharp move and it just kind of jumps off of that low like that, don't chase it going high. Remember, you want to buy low. Don't let that bounce fool you into chasing it, because once you jump in, the market almost knows that, right? They go, all right, he's in, now pull it back, right? So don't chase after it. Wait for that pullback. Grab that first test, as we always say, off the low of that bull channel. All right, guys? Last thing, then we'll go to the NASDAQ, and we'll talk about that second strategy I mentioned earlier. If this thing keeps on grinding higher, how would you buy it as it goes higher? Well, what's the problem? I want to buy high, right? I want to buy as low as I can. If we keep grinding higher, because look at the 60-minute chart right now. We know the market wants to go, right? The market wants to rotate now all the way back up. If we start to grind going higher, how can I safely get long without buying too high? Bear traps. Bear traps will always be my go-to entry pattern whenever I want to buy as low as I can. So if we keep grinding higher, which would not surprise me at all because of the 60-minute time frame, that big obvious objective to retest the high, if we start grinding higher here overnight, tomorrow morning, keep an eye out on buying as low as you can. Buy bear traps if we continue climbing that wall going higher. It's a higher high in price. It will usually be just a little bit above that moving average like that, right? Little shallow pullback there, get that juicy signal right below that low, just as we talk about in the free trading classes. All right, guys, that's the game plan. That's the first game plan whenever we see this kind of cocktail, right? This combination of three clues that we saw. Two-legged pullback, breakout pullback. Now you know my favorite setup, and also some variations on that pullback as well. Now let's get serious now and talk about the NASDAQ and the second strategy I mentioned earlier on. On the NASDAQ right now, again, we're bullish. We're bullish overall on the NQ. As we talked about in last night's video, we had that rug pull right off the CPI report. We anticipated a retest of that low. Last night we talked about, will they hold that low, right? Or will they continue going lower? Well, now we know, right? Now we know buyers control the trend right now. At this point, it's basically a bull market into a range, just like the S&P. We're trying to rotate now back up and take out those highs here. Now let's drill down to our tick charts, because again, tick charts are going to make everything a hell of a lot easier for us on the entry patterns. You'll notice up top there, that is a 4,000 tick chart linked up in the upper left-hand corner. And as always, that is the 21 EMA. There are ultimately three of the exact same clues here right now. There is that trading range. There is that breakout, right? This is that breakout pullback area. We have two different types of breakout pullback zones. I'll talk about why that's important, how to trade those in a moment, but two breakout pullback zones on the range. It's a very convincing, very big move going higher. Big moves are very, very important clues, because in a bull market overall, we do not want to buy high, we want to buy low. And to do that, we trade what? A two-legged pullback. Buy the dip, right, and back up to retest the high. The third clue, of course, is the size of that news spike. We may not know exactly how far the market pulls back, but once we do know how far it pulls back, we can then use the size of that news spike as a target going higher. Again, if you want to make more money, don't trade more often. Get better at holding on to your winners, and using a news spike as a measuring move is a very effective way to have the confidence, the patience, the discipline to leave those trades to run as the week develops. So we mentioned earlier on the S&P that my goal right now was to find that two-legged pullback, trap those bears in, squeeze those stops, go back to the high, right? We also mentioned too, if it holds the underbelly of that two-legged pullback, right? Holds the underbelly, two-legged pullback, double bottom, same thing, right? Two-try failure, right? And back up to retest the high. We mentioned that V bottom, pop up and grind, right? All right, I'm not going to go back and repeat the entire thing again. Before we talk about that second strategy, though, let's comment quickly on the aggressive breakouts. All right, aggressive breakouts and the breakout pullback zone. Okay, the aggressive breakout pullback zone. All this is we have this previous range from yesterday. Right there. So in all reality, we may end up only pulling back to that 614, right, 598. It's a breakout pullback. The reason why this is important is because the aggressive breakout pullback zone does not allow me to buy low. If I buy a pullback in the aggressive breakout pullback zone, I'm not buying very low, right? If I buy a breakout pullback in the regular breakout pullback zone of today's trading range, see, now I can risk small to earn large. There'll be a lot of big money players who will love that breakout pullback. Now, why does this matter? If all we get is a shallow pullback, what's my challenge? I'm buying too high. Now, you know this already, right? You know this already. But what is the best entry pattern if I'm worried about buying too high? It is a bear trap, right? By now, if you learn one thing from me, it needs to be bear traps in an overall bull market. It's one of the easiest ways to keep yourself out of trouble and make pretty good money. Now, what would a bear trap look like in this? Well, think about this. We'll get underneath that moving average, and the bears will come in, and they'll try to short this thing back down again. Right? That's what bears do. They'll try to short that going back down. If I see those bears try once, go higher, try twice, remember, higher high. Why higher high? Because sellers sell high, right? Sellers sell high. Buyers buy low. We know this already, right? So bears try once, bears try twice. This is another variation of a bear trap. Most of the time we go up right into a bear trap, right? This is simply a bear trap pattern. It's just simply on a deep pullback or a shallow pullback in this example. Okay, what you want is you want to buy as low as you can. And this is the way that you do it. Because think about this. If those bears get trapped in, their stops are sitting right there. We got them. Right? They're pinned in a losing position. If this thing rips higher, those stops will get triggered. And again, the size of that news spike tells exactly how far that market wants to go. The reason why you want a trap entry, the reason why you want a bear trap entry is because I want to get in down here. I don't want to be buying up here, right? Buying above that high, it defeats the purpose. Right? I'm still buying very high. I want to buy low, right? If I get that deep two-legged pullback, see, now I'm very low right now. Now trap the bears in. I can buy above those highs right now. I have a ton of reward for the risk involved, right? It works in that scenario. But if I see a shallow pullback right now, right? We pull back to the moving average and the bears try once and the bears try twice, and I do that same pattern. If I buy right here, what's my risk look like? It's this. What's my reward? It's this. Does that look attractive to you? No, it doesn't, right? It's not a lopsided risk-reward ratio. This is why on a shallow pullback, we need to get a bear trap, right? Because now on that shallow pullback, now my risk is here. My reward is right there. See, now that's something we can all get excited about. Small risk, big reward. So bear trap on that shallow pullback. All right, now let's go into that second game plan I mentioned earlier. That's a range. Ranges are very, very common after a big move. Think about it, right? Nobody wants to buy high, but at the same time, nobody dares to sell it, right? Because it's so bullish. If we do go sideways into a trading range, in fact, this would be one of the easiest ways to make money, because once we have a trading range, we know ranges act like magnets and they love to rotate. So it's very simple. If I see a range up here, what I'll do is I'm going to basically buy failures off support below it, right? So for example, support level right there, support level right there. What I'll do is once we see that range develop, now we wait for a breakout. Do not trust those breakouts. Never trust breakouts in a range market. Wait for the breakout. In this case, the bears come in and let them get short off that moving average. Once they do, they're pinned in. Use that failure into bear trap combination we've talked so much about already on these videos, right? So again, if we start going sideways, all right, which again is it's the second scenario we look for after a big move breakout of a trading range. That range becomes a magnet. Find levels of support, prior highs. We talk a lot more about this in the free video classes, but find support levels below the range and then use those failure patterns we teach in the free video course for a failure pattern. And then as always, right, buy bear traps as it rotates higher. Now, what does that mean, rotates higher? Well, think about it, right? A range is a balanced market. So the amount below the range can be used now above the range. And again, if you want to make more money, get better at holding on to your winners. That will tell you now where that next target is trying to go. All right, guys? Now, one variation of this, very, very important, one variation. So again, this is going to be a failure pattern into a bear trap off support levels below that trading range. And again, it could be this support level, it could be that support level. I don't know how far the pullback will go. What I do know though is that's the sequence I'm looking for if we see a trading range. Now, one more thing you gotta watch for here is if we do go sideways, and again, I'm simply illustrating right now. I don't know if this is where the range will be, right? It could be up here. I don't know. But once we start going sideways in a range here, be aware of something like this. It oftentimes will break out higher and then slingshot right back down again. Remember, you want to buy support below that trading range. Mark the amount above, pin that down at that low. That will give you the general area to look for the entry. Now pay attention very closely here. Now pay attention. When it rotates off the high like that, when it kind of reverses off the high like that, this will be a very strong move going down. In this case, I want to use what's called a 2-try failure. 1 try, 2 try, then back up, right? It's a slight variation of that failure pattern. It's that 2-try failure, and same idea, right? It's that bear trap, right? It's that bear trap to buy below that low. Does that make sense? Okay. Very small detail, very small difference, but very big important difference, right? Again, if it breaks out higher and reverses back down again, that momentum off the high is very strong. Remember, anytime we see a strong move down like this, it may double bottom and we do it again. Okay, think about that double bottom reversal we mentioned earlier on. The key here, though, is if it fake out breakouts off the high and pendulum swings down at that low, you want to absorb that momentum. Don't pick the bottom. Let those bears come in. Try once, try twice. Squeeze those stops. Grab that bear trap as it rotates back up where? Back to take out other side of that trading range. Ranges love to rotate. All right, guys? And again, don't be surprised if we get that 2-try failure. It goes up, retest that low, and do it again, right? Do it again. Double bottom reversals can be one of the most lucrative trades you'll get all week. All right, guys? Man, oh man, I am excited for tomorrow. That's the plan for tomorrow. Now, don't forget, guys, tomorrow morning, 8 o'clock Eastern time, come out and trade it with me. The easiest way to start making money in the markets is to learn and trade along with us every morning in our trade room. I'll put all the important links in the description of the YouTube video. Hope you learned a bunch today. Hope you use this knowledge to make a bunch tomorrow. And hopefully I'll see you tomorrow morning, sometime soon, trading with us in the morning trade room. Any questions, comments, concerns, hit me up in the comments section. Call the office. Use live chat. I'm always here to help out if you need help along the way. Right, guys? In the meantime, be well. Be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.